The next and foremost important chapter in economics is national income. National income, as the name suggests, is the overall income of a country. Now, how do we calculate national income? What precautions should we take while calculating national income? That we are going to cover in this chapter. But let's start with the definition first. Definition given by National Income Committee (NIC), where they said that a national estimate measure the volume of commodities and services turned out during a given period counted with duplication. So, that is the definition which is given by NIC. Now, let us have a look upon the features of national income. The first feature of national income, that it is a macroeconomic concept. We are not calculating individual income, we are calculating the income of a country. So, it is a macroeconomic concept. Second, here we take the value of final goods and services to avoid the double counting. Otherwise, if we take the value of all the goods and services work in production, that might cause double counting. So, we are taking the final value of goods and services. The third feature is net aggregate value. National income includes the net value, that means the value of any asset after depreciation. The fourth feature, we consider net income from abroad. National income also include the income from abroad, which we can calculate by the simple formula of x minus m. The next feature says that national income is calculated for a year, and that has to be a financial year. So, from 1st April to 31st March, we calculate the national income of a country. Next says it is a flow concept. National income never stops. Every year the country is earning, people are earning. So, it is a flow concept. And the last one is the money value, that we will count only those services which can be converted into monetary form. The services which cannot be converted into monetary form is not a part of national income. Now, you can see on your screen the circular flow of national income, where you can see the two parties, that is household and firm. Now, household provide land, labor, capital and entrepreneur to the firm, and firm provide goods and services to the household. Household raise consumption, aggregate demand, and firm raise factor income like rent, wage, interest and profit. Now, let us have a look upon the different concept of national income. The first one is gross domestic product. Gross domestic product is the gross market value of all final goods and services produced within the domestic territory of a country. It is depicted by this formula, that is GDP is equals to C plus I plus G x minus M. Details are given below in the slide. Second is net domestic product. Net domestic product is the net aggregate value. That means gross domestic product minus depreciation is net. The next one is gross national product. Gross national product means the gross value of final goods and services produced annually in a country, which is estimated according to the price prevailing in the market. So, here the market price plays important role. Formula is C plus I plus G x minus M plus receipt minus payment, that is R minus P. And the last one is net national product, NNP. NNP formula is GNP minus depreciation. Remember, whenever you want to move from gross to net, you have to deduct depreciation. Now, the method of measurement of national income. So, there are three methods: output method, income method and expenditure method. Output method is also called as product method or inventory method. In this method, what we do, we calculate the total output of different sectors like agriculture, mining, manufacturing, enterprise, commerce, transport, communication and other sectors which are there in our economy. So, we calculate the total output of these sectors, and then we calculate the income by output method. Two ways to calculate income by output method, that is the final goods approach and value added approach. Now, what precaution we are going to take while calculating output method? The first one, there should be no double counting. Second, the goods which are used for self consumption should be valued as per the guesswork. So, we need to take the imputed value of that particular good. Third, indirect taxes included in the market price are to be deducted and subsidies given by the government should be added. Fourth one, value of export should be added and value of import should be deducted. Fifth one, depreciation of capital asset should be deducted. Sixth one, While evaluating output, changes in the price level between different years must be taken into account. And the last one, sale and purchase of second hand goods should be ignored. Why? Because you have already counted that at the first time when it was sold or purchased. The second method is income method. In income method, as the name suggests, we calculate the income or payment received by all citizens of a country. We add up that and that becomes our income method. To know the income of the citizen of a country, we generally use income tax return as the base. The formula for net income for calculation of income method is rent plus wages plus interest plus profit plus mixed income plus net income from abroad. Precautions while calculating income method, that the first thing, we should not consider transfer payments. Transfer payments are scholarship, gift, donation, charity, etc. All unpaid services like services of a housewife should be avoided. That means services which cannot be converted into monetary form forms a part of national income. Third, any income from second hand sale of goods should not be included. Fourth one, income from sale of shares and bonds should be ignored. Fifth one, revenue received by government through direct taxes should be ignored. Why? Because while calculating individual income, we also considered that. Next one, undistributed profit of companies should be included. And the last one, imputed value of self production or self kept goods should be included. The next method is expenditure method. In this method, the total expenditure incurred by society in a particular year is added together, and that will give us this formula which says C plus I plus G, X minus M plus R minus P. Okay. What we are going to consider here is the private final consumption expenditure, gross domestic private investment, government final consumption and investment, net foreign income and net receipt. What precaution one must take while calculating expenditure method is, first thing, expenditure on intermediate goods should be avoided. We are going to take the final value of goods and services. Second, expenditure on repurchase of sale or securities should be avoided, because we are going to take only first hand purchase and sale. Second, expenditure on transfer payment should be ignored. Transfer payment is just payment from one hand to another. So, actually it is already taken into consideration. Next, expenditure on repurchase of financial asset should be ignored. Next, indirect taxes should be deducted and expenditure on final goods and services should be included. Subsidies we must include. Now, what difficulties we face while measurement of national income? The difficulty can be broadly divided into two parts: theoretical difficulty and practical difficulty. This question you can expect in examination for 8 marks question. Theoretical difficulty is basically transfer payment. It is very difficult to find out the transfer payment, and if you find it out, you are not supposed to take it. It does not part a form of national income. So, it should be ignored. Second, illegal income. Illegal income are not the part of national income. So, income from gambling, black marketing, theft, smuggling, kidnapping should be ignored. Then unpaid services. We are not going to take into account the unpaid services. The services which cannot be converted into monetary form should not be taken into account. For example, the services which we do because of love, affection, sympathy or charity should not be a part of national income. Then production for self consumption. If I am producing any commodity for my consumption, then it is very difficult to find out the value of that commodity. We can only find out the value of those commodity which are offered to the market for sale. But if I am using some commodity for myself or making some commodity for myself, it is a part of GDP, but it cannot be a part of national income until and unless I know the value. The next one, income from foreign firms. Income from foreign firms should be included in national income. The sixth one is valuation of government services. It is difficult to value government services because government sector is huge sector, and the government services like law and order, defense, public administration, education, health, all to be taken into consideration. But we do not know the real value of these services. And the last one is changes in price level. So as you know, inflation is there every year, it is increasing every year. So every year the price level are changes, and so it affect your national income. So that is to be considered while calculating national income. Now let's look upon the practical difficulties in calculation of national income. The first practical difficulty is double counting. Often things are double counted, which should be avoided. For example, if you are going to the market to buy tomato ketchup, then you are supposed to take the sale value of that tomato ketchup. You are not supposed to take the sale value of tomatoes, the processing, the ingredients, that should be ignored. You are supposed to take the only sale value of that ketchup bottle. Otherwise, it will be double counting. Second, existence of non-monetized sector. In India, in rural area, there exists non-monetized sector like agriculture. So, it is excluded while calculating national income. Third one, inadequate and unreliable data. We often use the primary source or the secondary source of data. Primary source of data is very costly, while secondary source of data is easily available and cheap, but it is not reliable, which may lead to wrong national income. The next difficulty is depreciation. Depreciation, as you know, it differs from asset to asset. So, it is difficult to make correct deduction for the depreciation. The next one, capital gain or loss. Capital gain or capital loss accrue when you sell any asset or your property. It is not included in the national income. The next one, illiteracy and ignorance. Due to ignorance and illiteracy, many people doesn't file their income tax return. So, the exact income of a particular household is unknown. The next one, difficulty in classification of working population. India has huge population, so it is very difficult to segregate the working population. Independent population and dependent population often mix, so as the national income. And the last one is valuation of inventory. Valuation of inventory basically talks about that all the inventories, raw material, intermediate goods, semi-finished goods are valued, but the valuation method differ from person to person or accounting standards. So, it will give a wrong national income.